do you.
Yeah.
There's no two people whose context is the same.
Yeah.
But, so whatever I say, you do you.
Yeah.
You need to have a personal relationship with money. Just as with love, when there's no respect, there can't be love. I've been in banking or financial services. I'm not sure that I should be saying this for 25 years.
Yes.
The way we started then is the same way we'll start. We started actually by saying this is already happening. The lending is already happening without collateral. We went in and observed from as early as you can or from where you are today. Just starting the culture of saving permits you to take risk. Risk absorption capacity is the most important role that saving does for you.
Yeah.
And it is, you then realize that the person who's able to take risk, their growth trajectory is a bit more exponential than linear.
Yes.
Okay, so very, very important to just make saving a culture. My Baba, 1 year ago was an employee. Less than a year, the guy now has 7 employees. Still, I followed him when he set up his own shop. He started with a very tiny shop.
Yeah, we know how we are with the barbers.
Yes. And women say we're not loyal.
Yeah. Hey everybody, welcome back to Financially Incorrect. I am your host Barack, and of course, as you know, this podcast is proudly sponsored by FXpesa. Although today we have the person who signed the check to have a second sponsor on this podcast on here today. I'll introduce him in a minute. But of course, as you guys know, if you've been paying attention to the podcast, we have an event coming up on Saturday. This episode is going to go up on the 28th. So 29th Saturday, we have the Love and Money Festival. It's going to be down at Jane Bavan and Loresho. This is a podcast. This is an event being put together by Financially Incorrect and So This Is Love by Jules. Please come down. We've worked hard to try and create a really interesting experience for you guys. We're going to talk about love and money and the intersection between the two and how it all works. And hopefully we'll learn a thing or two. We have a play that we're using. We have stand-up comedians who are going to be on the ground. And then, of course, there's a podcast discussion that we'll have. There's 2 options of the show. There's a 1 p.m. and a 7 p.m. Option for your preference. So please do check the link in the description box. It's going to have the tickets. And hopefully we will see you guys at the Love and Money Festival tomorrow. So I'm going to introduce my guest who I think has worked in a few countries in Africa, if I am correct. His name is Eric Muriuki Njagi, who is the Group Director, Digital Business at NCBA and the CEO of Loop DFS. Welcome to Financially Incorrect.
Thank you, Barack. Glad to be here. I was hoping you wouldn't say I've had to pay to get here.
No, we've talked about Loop from, I think, for the last 3 months, 4 months. And we've been talking about how convenient it is. We've been talking about how useful it is for people, both for people who run businesses and individuals who are using it. I downloaded it onto my phone once we got into an engagement and have used it since. Collins, who's a marketing manager here, has been a long-term user of Loop. So the audience know. So I was just telling them we have you on board. So the first question that I'll ask you is actually based off of this event that we're throwing on Saturday, Love and Money. And my question to you is, what do you think is do you have an unpopular opinion around love and money as a construct?
Wow, interesting. I didn't
expect that.
I didn't expect that one. But I think if I just speak from what I know, money, you need to have a personal relationship with money. And just as with love, when there's no respect, there can't be love. So you really need to respect your money, and that can be in many ways. One thing I really appreciate and really value is actually what we call hustlers or entrepreneurs. So just respecting how you make your money and going about it with the not just seriousness, but just the right regard towards how do you make your money. Because I think by being serious, by being respectful about how you make your money, you also then become respectful about how you spend your money or how you want your money to serve you. And so in that sense, then I can see why that analogy is quite relevant, not just for the question, but even for the event that you guys are planning for.
Yeah.
You need to have a respectful and loving relationship
For both.
with your money.
Yeah.
Yeah.
Are there any specific trends that you that you see, I guess, with your work with Loop or with your history and your career in the banking industry that you've seen customers have with love and money and things they potentially struggle with, right? And maybe this might come in the context of opening accounts for your kids or joint accounts or basically just elements where love and money come together. Yeah.
Wow, you're really stretching me on this one. But again, I'll just speak of what I really know, my own experience with money. Money is a funny thing. Using the theoretic definition of money, it's a medium of exchange, it's a store of value. And in those two functions that money plays, what I've come to appreciate is money has a lot to do with the dignity. And it's not like a linear relationship. The more money you have, the more dignified you are. No. But actually what you do with your money is actually what dignifies you. So I've observed money and actually how money is used. And particularly for me, who's speaking from the supply side, i.e. I'm in the industry, I've been in banking or financial services. I'm not sure that I should be saying this, for 25 years.
Yes.
And we also are very central. If anything, we were the pioneers of mobile-centric savings and loans. That's M-Shwari. Not just first in Kenya, not first in Africa, but first ever in the world. And what we saw with M-Shwari is the dignity that it gave people. I'm able to save my 100 shillings, my 1,000 shillings. And before then, the only options you have to formally save, they actually even took your money in very undignified ways. You fill forms, minimum balance is 20,000. If you don't have 20K, don't come in. So we solved that. You can save as little as 100 shillings at zero cost. Also, you can borrow without your neighbors knowing you've borrowed. If you're late with the commitment to pay, which is 30 days, we very intentionally engineered a role of a mechanic. And again, that was just listening to customers as we're doing the design. And you realize people are actually very dignified when they tell you, I'm late, but I'll pay you. So engineer that into the product. So there's the element of dignity, which I think is also a very important one when we are talking about money.
Yeah. I mean, and this is from what you just told me in terms of saying that you were the first people to, take on M-Shwari and make loans or the ability of loaning money accessible and inclusive. I think I would argue that's an element of financial inclusion. What impact did financial inclusion have in the, and again, I want to use your 25 years of experience in the financial space or banking space. What impact did financial inclusion have on the Kenyan ecosystem? What did it do for us to move from a thing of, like you said, minimum balances and all of that? What did it do for money in the country?
Wow, how much time do you have? We're actually very proud of what we've done in the short period. If I speak specifically to financial inclusion, let's first give credit to M-Pesa. Being able to formally participate in financial services, M-Pesa has done a big job of that. Before M-Pesa, financial inclusion in Kenya was in the range 30-35%. Enter M-Pesa, it jumped. Today, I think the number sits somewhere about 80%.
Wow.
But I appreciate what M-Shwari has done is to say M-Pesa caused intermediation by moving money over distance. I want to send you money, I'm in Kisumu, you're in Mombasa. So the disruption they caused is disruption or intermediation of distance.
Yes.
Enter M-Shwari is intermediation over time. I need to pay for this today, but I'll have money in next week or 2 weeks from today or next month. So you bring that time when you'll have money forward and you're able to transact now. Or I have a surplus today. I want to send it forward into time. So I lock or save that money and actually lock it or leave it open. So I'm sending the money I have today because I have a bigger demand or need later. Let me send it forward. So in that sense, without M-Shwari, financial inclusion beyond payments had actually still remained at 20%. And with Mshwari today, 33 million savers, we have then also brought up savings and credit to also count when we say financial inclusion. There's 33 million Kenyans that can save, that can borrow, thanks to what we've done. And we've continued to take this forward with services like Fuliza, again, which we are a part of, or actually the primary operator of Fuliza. We also went on and take the same principles, dignify money, give access, not just to payments, to credit, to savings, but now go beyond consumption credit. So the profile of credit you borrow on either Fuliza or Mshwari is really to address consumption type needs.
Yeah.
Although a lot of traders, actually the highest activity of Mshwari is before 6 a.m. And it's people who
getting money to be able to go and make those day purchases.
Day purchases, financing the day's stock. An average Mshwari loan is about 12,000 bob. That's what most traders use for replenishing their daily stock. And we're very proud, again, to answer your question, how we've contributed to just the evolution of our society. I can start today, I come to you, I ask for stock, and I had no money and I pay you. But by end of day, I've actually made a margin of 20%, 40%. And I still have the money for 30 days.
Yes.
I can keep trading.
Yes.
And at the end of the month, I've started creating economic independence. So that really then inspired us to say, okay, there's this guy who's 12,000 is helping him with stock trading, but he wants to move from hawking into a shop. He needs 100,000, he needs 200,000. And that's the job that Loop then is playing to say, okay, up to 3 million Kenya shillings, the same principles, easy access, dignified utility or propositions. But then now let's help you put money into production or productive activities. A great story I'd love to share. My barber, 1 year ago, was an employee. And for some reason, the employer was running a franchise of barbershops. And for some reason, that started tanking. Less than a year, the guy now has 7 employees. Still, I followed him when he set up his own shop. He started with a very tiny shop.
Yeah, we know how we are with the barbers.
Yes. And women say we're not loyal. Yeah. And I passed by there. He's expanded his business. He's taken the next shop. He's been in business about 6-7 months. He got his first loan ever of about 500K from Loop. Within 2 weeks, he has transformed the space. He has put in equipment and is seeing more business. He's added more employees. So a guy who was an employee 1 year ago today has 7 employees. Today is a business owner. He's paying taxes. So seeing that we can move from consumption to productive credit with Loop is something, again, we also feel very motivated to continue doing what we do.
Maybe a question on that, and maybe we can use the case study you've just given us of your barber. What are the terms that he would be looking at, or average business person would be looking at? If I'm coming in, I do want to take this 500K loan. What are the repayment terms? What are the things I'm looking at? What do I need to give you? Because like you've said, if he was employed a year ago, he doesn't have bank statements for a year or many things that financial partners would usually ask you to ensure that you're able to pay this thing.
Yeah. So one thing again we did, or we can take pride in, is we actually were the first to create information as collateral. As you know, before Mshwari, any lender would ask, come with this, come with that, title deeds, logbooks, and all that. And count the number of logbooks and title deeds, they don't exceed 10% of the population. So that's the only percentage of people that could access credit. We've helped individuals and enterprises build collateral based on their transacting activity. Basically, or let me say, use of alternative data. We've run this business for 12 years. There's not a single day we've asked any of the 33 million people that we've served to come with a statement. Now, with Loop, to speak about the case I've given of my barber, and it's true not just for businesses, that's Loop merchants, but also individuals like you. I'll speak of the propositions first. With regards to credit, on Loop, you can get an overdraft against your Loop wallet or Loop account. You can get a 30-day loan. You can get a buy now, pay later facility. So I want to upgrade my phone, I want to change my furniture, I want to buy a new TV, and that you can pay in installments, 6 months, 12 months. But you can also get a term loan that goes up to 3 years. These 4 propositions are available to both individuals and businesses. Okay. Now, for the individuals, essentially it's just your activity with us on Loop, whether it is payments, whether it is savings, whether it's credit. Of course, we also tell people character matters, and with the development of the Credit Reference Bureau, also that does give us useful information about what we do. Unlike most other lenders, for us, your credit reference report is not a binary yes, no. It's just additional information. Okay, that of course will make the decision of
an extra data.
If makes a decision of how much, makes a decision of at what price. So it's not a binary. If you have ever gone through a sticky patch, and a lot of us went through that during COVID, it does not mean that on Loop that any patch you ever had, it's a binary no. No, it's actually just information. And of course, what is most relevant is your last 6 months history. So the to close on your question, those 3 credit alternatives, which span from very short term, an overdraft, all the way to 3 years without filling a single form, without speaking to us, will not take you more than 10 seconds to start and complete the journey. Because we actually, for all the 3 products, you know of your credit limit in advance. So when making the payment, you just access the limit. It's not apply, then complete a journey and so on. Yeah.
And it's purely based on the transaction and how I use the Loop app in my transactions and keeping track of that. Okay. I think that's really clear and makes a lot of sense. The other question I wanted to ask you, specifically around the financial industry, and I think I have asked this to 2 other financial experts who've sat there. One who was an educator, and I think the other was also in a financial institution. What do you think financial literacy would do for the country? So, for example, we have elections coming up in the next 2 years. If one of the politicians, whether it's at presidential level or governor level or whatever the case is, the same way, they come and they say, we want education, we want health, we want whatever the case is. But if they come and they purpose that financial literacy will be a strong pillar for them, and they try and push that into society, what kind of impact do you think that will have on the society?
That's a really, really good question.
Yeah.
And there isn't anything any one of us does, anyone in the room here does, that doesn't involve money.
Yeah.
And it's not just for paying. It is more impactful in your life when you're actually now intermediating money over time. You're thinking about, I want to move house, or I have kids, where do they go to school, when do they start? I want to change my job. It's not, money is now, I guess you start seeing money now, not just what you have in your pocket or your bank account, but actually now start seeing money as a tool to achieving whatever goals, aspirations, or managing whatever risks that you have.
Right.
So if financial literacy is actually brought into our programs, into our education curriculum, then it means at a very early age, we start understanding money as a tool, not money as an amount I have.
Yes.
And when you approach it that way, then you have a very important tool set in your bag of hacks. How do I get better at life? And that's from the lowest level, which is just managing your daily affairs. Next level, which is really just planning your affairs. And I think very importantly, investing. We were having a debate with my former high school mates, WhatsApp groups. These are people who've had enough years of experience, have been doing everything. But a very simple question was asked, okay, how come banks don't lend to people with ideas? Banks should never lend to people with ideas. That sounds like the wrong thing to say.
Right.
if you have an idea, it's a venture. It may work, it may not work. But if you appreciate, I'm lending you the deposits I got from him, then I need to be very careful when lending to you, because when he comes for his deposits, I have to make them available to him.
Yes.
One of the things I've seen we have not developed or advanced as a society is distinguishing venture capital from
Traditional
loans. Bank loans. If you have a great idea and you have a friend who has some surplus cash, sit down and have the right conversation. Let him understand the profile of risk that is being taken. Let him understand you. Because you look at what is happening in places like Silicon Valley.
Mm-hmm.
You go to coffee shops, most of the coffee conversations being had, you can clearly see three actors there. The guy with the idea, the guy with the money, and the advisor or the matchmaker. And it's something I wish I could see much more of in this market. It's something that I also personally try to do.
Yeah.
Because I think the more we start understanding the different ways to use money, and now we're speaking capital, then you know when to talk to a friend or an angel investor. You also get to know when to talk to a bank and what kind of conversations to have with a bank. So you can imagine then, if instead of everyone with some spare cash building the next mall and the next block of apartments and struggling to find, you're actually funding ideas.
Right.
The guy with money will get wealthier. The guy with ideas then will have more breakthroughs and actually more, because success breeds success.
Yes.
People are great at running in Eldoret or E10 because they've seen success. So I wake up, I also run. So if we get to see more people getting venture capital, local venture capital, and of course there will be some hits and some misses, which is why I don't advise a raw idea going for capital from a bank. The bank will ask for collateral, they will sell your stuff.
Right.
I don't advise that, and I hope you can see why it's the wrong thing to do.
I can see, and maybe my question to you is then: are people coming to you with the wrong preposition? Because I mean, banks. From my understanding, correct me if I'm wrong, how banks make money is I'll take your deposits and I will invest them and I'll ensure that there's enough capital for when you want to take some money out. But I'll make my money by investing this money in different elements, right? Whether it's bonds, whatever the case is,
yes.
wherever I want to invest.
Yeah.
So I'm wondering, is if I then have an idea and I come not as a loanee, but I come as a potential investee, and I say, hey, I have this great investment. If you give me 100,000, it potentially would become $1 million. Rather than saying, give me a loan for 100,000, and then you tell me, okay, I can give you a loan, but what's the collateral for the 100,000? So is it that we are asking the wrong question or coming from the wrong angle?
Okay.
And are there what would be the biggest hindrance if that became an option? If people were able to come and pitch investment ideas to banks in the same way they come and ask for loans.
Actually, one of the things I would love to do, hopefully in the near future, the same way we have democratized savings and lending, particularly lending, what you're asking for is actually, by definition, investment banking.
Yes.
But investment banking, only large ticket sizes tend to get that kind of service from banks.
Yes.
So a telco company wants to go into a new market. How do they structure finance? Part of it is debt, part of it is equity, and so on and so forth. But you then find the way our financial services institutions, and particularly investment banks, are set up, most of them have a minimum ticket size. If you're not talking $1 million, $10 million, they're not interested. Now, but the principles can actually be codified, which is what we've done to lending. How do I get you, who has an idea that needs 500,000, that is a raw idea? How do we help you de-risk the business? How do we help you access networks? How do we help you structure how that 500,000 should come in? How do we help you access the assets you need for production? They not necessarily need. is it possible to digitize that so that you can actually offer that kind of service at small tickets? That is certainly a very worthy pursuit. And the way we started then is the same way we'll start. We started actually by saying this is already happening. The lending is already happening without collateral. We went in and observed. So I'm sure you've spoken to a friend and there's a conversation you had. We just need to go and observe how that is happening and how do we digitize that, knowing and bringing in the same principles that apply for in investment banking for the larger ticket items. Yeah.
So basically, you're saying it can be something that can be worked on and can be offered, and I guess from a digital perspective and a digital platform, it's something that, I don't know, the near future,
near future.
3 years,
I appreciate
whatever.
the greatest thing I've come to appreciate in work is actually imagination. Just hear, listen to problems or problem statements, frame them well, and then just imagine. And it's from imagination that then the solutions come, and it's possible. It's not rocket science. It should be.
I think it would be a game changer. You know, from where I sit, I think it would.
Yes.
Change a few things. Anyway, so back to now your story, right? So you've essentially been in banking and in finance for 25 years. Is it that you love money or the elements of the financial space that much, or where did you get your first lessons around money? Was it from home? Was it in the workplace? Who taught you? Who was the first person to teach you about money?
I think I've been trying to run away or beat the poverty line all my life. So I mean, right from college, what's available to you as pocket money and what you think you need, there was already a gap. And we started hustling from first year in college. I remember running a barber shop, a second-hand shop, and wines and spirits, all of that in my room. So I got to appreciate that, yes, if you want something, you just need to figure out how to organize value, present it to someone, and get paid for it. I was, of course, fortunate. At the time I was finishing college, I had a job. Getting jobs was much easier
Than it is now.
So that helped. But even then, I was in JKUAT, studied math and computer science, so not finance. But my first job was with a bank in tech, and my first 10 years were in tech, like tech. And I got the opportunity to then move into business, but let me call it, we probably were the early day fintechs, but within a banking institution. And hence why I carry those two titles.
Yes.
And essentially, I would say I have for the last 12, 13 years been what you would call an intrapreneur, where essentially you're an entrepreneur, but within a corporate setting. And that has come well. But throughout, whether I'm doing this for my employer, the principles of put together value, understand, see a need, study that need to understand, okay, there is a need here, whether it's a good or a service. Even a good, like a bottle of water, you have to see it as a service. I'm hiring this bottle of water to perform a job.
Yes.
The same way you'll hire...
Is the job to be done principle?
Yeah, there's a jobs to be done principle, exactly. So just understanding, okay, what's the job to be done here? What pain is this person going through in the performance of that job? And what are the extra benefits or gains I can give the person in the performance of that job? Just understanding those jobs, pains, gains is, to me, the basis of figuring out how to create value.
Yeah.
You figure out how to create value, and you can deliver it to someone who's willing to pay, and you make money.
Make some money.
Yeah. So there's it's a message which I think, and even as you're talking about financial literacy, it's not only about finance, but there also has to be money and entrepreneurship taught. If we're to going back to your question on our education curriculum, so first I've used that principle in employment. but I've also used the principle. I mean, I wouldn't be a Kenyan if I don't have a side hustle somewhere.
Yes.
So even in any other things, any other activities or economic activities I do outside of employment, it's the same principle of who do you want to serve, what problem do you want to solve,
Yeah.
what's the value, jobs, pains, gains do you want to deliver, and how will you deliver it? Is the person willing to pay for that? Then that sets your price, and you make money.
Some money. Okay. So I've sort of understood at that sort of uni level, like you said. I mean, tongue in cheek, you said, running away from the poverty line, but then you have an entrepreneurial spirit. Where did you get the entrepreneurial spirit from? Was it innate? Did you get any of that potentially from your folks when you were growing up? Did you see it in the house? What was money like there?
Actually, I would be quick to even contradict myself to say, or maybe to agree with you. I probably I'm more of an entrepreneurial spirit than an entrepreneur. Just how I spend my time is informal employment. But the entrepreneurial spirit is very much there. My parents they worked until their last day. Again, context. For them, you finish college or school straight into a job, and for them, a job was lifetime. But over time, I consider myself a keen observer of life. And just from observation, the people or the profiles I've come to admire most, it's naturally not the suits. It's not the executives in suits. It's actually entrepreneurs. People who solve problems, social problems at scale. That really, it's not just something I admire, but I actually find myself very drawn to it. So look at a problem, and particularly social problems, and solve them at scale. You'll make money. Yeah.
Okay. All right. So I guess when you get into your first job, because I guess through the podcast we try and see what figures our guests would give us. When you get into your first job, what are you being paid, and what are you doing with your personal money? What are the principles you're applying for how you're handling your own finance at that point in time?
Yeah. So to answer your question, what was I paid my first job?
At the ISP.
ISP for all of, is it 4 or 6 months, was 13,000 Kenya shillings.
Okay.
A whole engineer or network engineer. Then moved to a bank, I think 58.
Was it starting salary?
Yeah.
And what were the things you were looking at doing with your money at the time? Were you saving it, spending it? Are you living alone? Are you living at home?
I was living alone and doing exactly what a 22, 23-year-old should be doing. But I was fortunate. My first employer understood that they needed to guide us. And I remember sitting in one of these classes or coaching sessions, and the idea of just set aside 10%. And I have always put 10% of my net pay into savings, not pension, since. And with every increment, we increase the 10%. Yes. Or rather, so it's always been 10%.
Always been 10%, regardless of whatever amount it is.
Yes.
Right. Okay.
So as a culture, because I think savings needs to be a culture, not something you do today if you have spare cash.
Yeah.
If your net is 50, just see it that your net is 45. You will be fine. You will still live. If the 45 grows to 60, your net is 54. So just seeing that is not your money for today. Just put it aside and structure, find some instrument that is appropriate for that job. Remember, again, jobs, pains, gains. Don't put it in another bank and say, okay, I've separated, but that other bank account is as accessible. You're human. Just put that money fairly far away from you.
Yeah.
And in a way that it needs to be a serious consideration before you break that.
Yeah.
And make it a culture, make it a habit. You'd never think about that money for your monthly spend. Easier said than done. I was fortunate I started early. I structured something that is not easily accessible, and I just put it aside.
Yeah.
I think the other habit is, again, these I got from a friend. Well, he's an elder brother to a friend when I was still young. If you switch jobs or get a major increment, stay calm for the first 6 months.
Yes. Don't change anything.
Don't change anything. Don't move house, don't change car, don't change lifestyle. Just stay calm for the next 6 months. And you'll be able to you'll have, those 6 months, you'll have received better information about what to do with the spare cash. And if moving house is necessary, then do it. But just don't get excited
about the increment.
About the increments. And just tell yourself 6 months. That's enough time to just stay calm. Yeah. And then, of course, as I continued working, fortunes continued getting better, then I'll admit, if it wasn't for this 10% culture, I would otherwise say I'm not a good saver. But what I tend to do is say, okay, I'm responsible with spending, but I'd rather put money at enterprise. So I wouldn't say I'm a risk taker, but as I said earlier, I really admire entrepreneurs. So putting money into enterprise then now becomes for me, is it a form of saving? Because the money has to be there. So if your primary income is a salary, you can't put nothing into something. So beyond the 10%, any surplus, how are you accumulating it? But the point I'm making is I then don't fear to venture.
Yeah.
And remember, that don't fear is because there's already a basket somewhere that I set aside a long time ago. I've been keeping aside for a long time. So to even give yourself the ability to venture, if you're not saving, you'll never venture. Yeah.
From your expertise, again, with the years we've mentioned multiple times in finance, what's the biggest hindrance? What are the biggest friction points for people when it comes to saving? Why does it seem to be such an arduous task for banks to get people to save? And then I want to bring that question now to loop is, what have you guys done to try and make that simpler for a loop user?
I'm glad you've asked that question. Again, also when we started with Mshwari, the narrative was Kenyans don't save. And I'm sure you'll hear it even today.
Yes.
What we observe is actually Kenyans save. They don't have the right tools for saving. So it was more of a supply side problem than a demand side problem. Kenyans want to save. The tools have not been efficient or have not been appropriate for the job, which then means you have to understand how people save. Okay? There's a period saving meant buying land. There's a period when saving meant chamas. You don't say there's a period. It's not like a period in time, but actually a period in your life.
Yes.
There's a period in your life when mobilizing savings in groups is the most efficient way of saving, whether it's merry-go-rounds and disburse everything, or whether it's, you want to call it investment groups. Largely they're just saving groups. Even when you transform the savings into land, it's just a longer term saving, but now here you're bringing in some trading risk.
Yes.
What if we don't
sell it
at the right price and so on? So Kenyans save, but the tools weren't there. And what have we done with Loop then is the natural question is, one, I'll tell you what is on Loop today and what will be on Loop in probably, I would say, a month, 4 to 6 weeks. What is on Loop today is you can actually create a savings account, an investment account in 4 or 5 clicks. No forms filled. You can set up what we have as Loop goals. I go in and say, okay, I'm saving to upgrade my car by this timeline, and it calculates for you, okay, these are the installments you need to be making. Where will you make the installments from? From this account, and that runs. Setting that up will not take you 2 minutes. Similarly with Invest, I have surplus cash or I want to be topping up. every so often. And we've started fast with just a fixed rate of return, i.e. a risk-free. So when I say fixed, is meaning there isn't a price index floating up and down somewhere. It will tell you X percent, it is X percent.
Right.
So we have that as an alternative. And as I said, you can do this without filling a single form and complete any of these journeys in under 2 minutes. What we're also adding in about 6 weeks or thereabout is one thing we're calling Save As You Go. You then say, okay, anytime I receive money into Loop, set aside X percent. And whether it's me sending you back money that I owe you, whether it is your salary coming in, it comes in 10% or whatever percent you prescribe. And of course, the Save As You Pay. If I'm paying for lunch and it comes to 1,300, I could say, okay, round up to the nearest 500 or the nearest 1,000. So if I spend 1,300 and I've set it to round up to the nearest 500, 200 goes into savings. 2 minutes later, I make another payment, round up. 3 hours later, I make another payment, round up. And you come at the end of the month or the end of the period, you're just collecting your cons over time. Now, that's really just helping people with tools for building up savings and really creating the culture.
Right.
What we are also adding is introducing for those customers who might want a bit more risk, i.e. more return. Because today on Loop you earn 7.5% for your savings and investments. You say, okay, I want to put my money in T-bills, or I want to put my money in real estate investment trusts, or I want to put my money in the money markets. But then you find the products that are offered largely either say they have a minimum ticket size or the process of, to use a technical term, securitization, to say, okay, here's your certificate for T-bills. It's too long. And you just say, okay, I want to put, let's even say 10K or 1 million or 10 million, whatever you might have. But I want to put it and earn the rate of return of T-bills. You don't have to go through the process of buying T-bills to earn the rate of return of T-bills. So it's a price index. So you say, okay, I want a risk-adjusted return, but use this price index. So it's either T-bill or use this rate or use this money market fund. Now, of course, we handle all of the back office. All those monies will go into a fund manager who then goes and buys the T-bill, but he buys T-bills worth $1 billion because there's 1,000 of you that have saved. Yeah. So really just trying to make the tools available. And what we're concerned is your goal. Your goal is a rate of return. Your goal is not money market fund or money market fund X. You don't need to know that. You want to know, this is my rate of return. Is it fixed or is it variable? Is there protection on downside? And what has the history of this particular index been? That's what a customer needs to know.
Yes.
And we facilitate that.
Okay.
And you don't have to. Let me say, Loop is actually we when we changed our brand 2 years ago, we pivoted from banking. So Loop isn't a digital bank; it's actually a digital platform, meaning that you can continue banking elsewhere, but then you use Loop as your money manager. So if you want to pull funds, link a bank card, whichever bank, it could be a Kenyan bank, could be a US bank, and say, okay, I want to invest with Loop, so I'm pulling funds, load that into my Loop wallet, and then invest. Okay. Yeah.
I hear that, and maybe I have to ask a question on that because I guess for a long time my association was NCBA and Loop. So of course, even with the introduction of this product, when I was told, like what you're saying is you can draw monies or funds from another bank account. How exactly does that work? How do I bank with someone else? But use Loop. What are the things the things I need to do? Because there must be something I need to do.
Yes. Yeah. So Loop, and I would let out a secret. Even when we picked the brand name Loop, is the whole idea of, you've had the debate of closed loop versus open loop. So we wanted to go the direction of this is an open loop. A loop in the sense when you're in, there's so much more value for you, but it's not a closed loop. So you do not need to be, it's not a product offered exclusively to NCBA banking customers.
Yes.
You actually initiate your relationship with Loop from the App Store. Once you've registered on Loop, you then can fund your Loop wallet. You can fund through M-Pesa or Airtel Money, or even Telcom Cash, I believe, yes. You can fund your Loop wallet through PesaLink, or you can link your Visa or MasterCard card for any bank anywhere in the world and be able to pool funds into your account. That's using now the Visa rails.
Right.
So in that sense, you see that Loop is an open platform. The design principle is it is open.
Yeah.
Once you're in Loop, then you can use any of these services that we have.
Okay. Now I get it. Makes a lot of sense. What has, now if you sort of come back to your life, what has this 10% saving principle that you picked on really early on in your career, what has that allowed you to do? What are the big milestones potentially that you've been able to hit as a result of this 10% that you've been putting away for your whole career life?
Oh, I think the most important thing is it has permitted me to take risk. You ask, why are there more innovations, say, in the US than in Africa, or in Europe than in Africa? It's because they have the capacity to take risk. If your social security works in your country, you can take risk. If things go wrong, you don't hit rock bottom. In most parts of Africa, if your money matters or money affairs go wrong, you're on your own.
Yes.
So you find we're very hesitant to take risk. And so applying that to a personal level, from as early as you can or from where you are today, just starting the culture of saving permits you to take risk. So throughout my life, I've been able to take risk because I know I have some fallback arrangement. But also when big tickets are looming. So I took my daughter, my firstborn, to college in February. And say 2 years, 3 years earlier, we started seeing the direction of travel is towards college out of the country.
Yes.
The anxiety wasn't very high because immediately you go online, you see the fees, and you're like, okay, let me look for money. But if it doesn't happen, there is. So those two things: one, knowing that you can withstand shock, because you can lose a job, and for 6 months you have no pay, or COVID can strike, and your business has to close until they say you can open. So the risk absorption capacity is the most important role that saving does for you. And it is, you then realize that the person who's able to take risk, their growth trajectory is a bit more exponential than linear.
Yes.
Okay, so very, very important to just make saving a culture. And as I stated, on Loop, we actually have set up the tools for that, and we're continuing to innovate and help you make saving or the job of saving easier and less anxious. Okay. And then, of course, the other way it has served me is when you have those episodic big tickets, that joto in the stomach is alleviated to some extent. Yeah.
Okay. I mean, based on what you said, and what you've told us right now, in terms of prepping your firstborn daughter going to college, what are the different major milestones that you've had in life, and what impact has it had on your financial journey? So when you were just about to get your firstborn daughter, did you think, I need to make more money? Or did you feel I'm making enough money? Or did you have to change anything with your philosophy? And through different major milestones that you've gone through, have you had a milestone that truly changed or warped the way that you were looking at money and finance in your personal life?
Yeah. I think before I give any answer, I'll just say first, do you.
Yeah.
There's no two people whose context is the same.
Yeah.
So I'm not giving advice. I'm just sharing
Your story.
So,
Yes.
so whatever I say, you do you.
Yeah.
But I think as we started the conversation, respect and dignity. Respect what you do that earns you money. And then when the money comes, treat it with dignity. So if you apply those two principles or values actually towards money, of respect your hustle and dignify how you use money as a tool, then as you transition through life, what I have gone through is not what you will go through. My opportunities, my setbacks are mine, not yours. Yours will be yours. Then those two principles will serve you well. And they change as you transition from one phase of life to the next. Right now, my biggest concern is my parents' health. They are outside of insurance by virtue of age, and bills are daily. We're also a large family, so there's also that you just find yourself there. That school fees is not only your children; it's a bit of a small community.
It's a wider pool, yeah.
Yeah, so that's my story where I am today. It was different 10 years ago. It was certainly different 20 years ago. So I think really the takeout, which I think is relevant, is just carry those values of respect your hustle. If you're in employment, respect your job. If you're running a hustle, respect your hustle and don't allow anyone to disrespect it. And just dignify what you do with money, or what you do with money, let it be dignified.
Yeah. Okay. I think that's I guess a good philosophy to pick up on. And I think, I mean, as we've said many times on this podcast, we don't give advice. The hope is that people can learn inadvertently from the stories that the guests are sharing and how they've handled money and things like that. So that's sort of a given, but a good reminder. Throughout your life, I guess if you look back at whether it was through childhood, when you were growing up, what do you think has been your lowest financial memory, your lowest financial point?
Well, I mean, I've been independent like since high school, or since you finished high school, which means you have to figure out what you'll eat. So
Since you finished high school.
yeah. So yes, there's been a night or two literally without food. But that's much earlier. I think since I started working, of course, I've been very fortunate. I've never been out of a job, and that's why I say it's not everyone's
Your story is not my story. Yeah.
But there are moments when you find your commitments have exceeded your income, and these are not commitments you can just drop. You have to show up. Yeah, so getting into non-productive debt. By non-productive debt, you're getting into debt that is consumption debt. Is something you don't want to find yourself in for a prolonged period. Yeah, so of course I do relate with that. I've been there.
And what are some of the things that you do then? So, for example, when you talked about your commitments being more than your income at the moment, what are some of the things that you did at that moment? Is it robbing Peter to pay Paul? Is it juggling? Sort of things
so
right and left?
at some moment, of course, you borrow from friends. You realize again your reputation might go south. So break the savings bank. But it's just stay calm. This will pass. Unless you've gotten yourself into a bad habit, which I think you need a level of self-awareness to know, okay, am I just in a tricky patch or have I been foolish? If you have been foolish, please stop. Yeah. And I guess that's what self-awareness is about, to just be able to call yourself into a meeting and say, okay, the board has considered this to be foolish behavior, so stop it.
Stop.
But if you're able to see and make sense of how you got here, stay calm, just work your way out of it. But again, there's rarely, particularly with money, there's rarely shortcuts. You have to, if you're employed, just spend less than you make. If you're in business, just make sure you're creating more value than you're consuming.
Yeah,
it's that simple. Yeah.
Okay. What about I guess on the other side, your happiest financial memory or happiest financial moment?
Actually, it is. It involved finance, but the joy didn't come from finance. It's in enterprise and creating value. Seeing you've created value, people are happy, and not just happy out of joy, but you've translated opportunity to outcomes for very many people, and it is paying you. Now, that joy is not about what you're banking, but just seeing that from a PowerPoint to outcomes.
Yes.
This, maybe to just give a bit of context, this was a venture where I invested into. I was not the creator of the company, it's an agri-tech. Invested into it, but then took controlling stake, but then worked with the team to say, okay, this is how you build a business. And a company that was going nowhere to one that is now beginning to generate valuable outcomes.
Yes.
And create opportunity for the people you're working with, whether it's input providers, farmers, and so on. That was a proud moment.
Yeah.
Okay.
I mean, it sounds like it. Sounds like it. From where you are at now, right? Both, and this I'm asking both from a personal perspective and a professional perspective in terms of Loop. What does financial success look like for you in both of those roles? Yeah.
I think financial success is maybe something that other people will talk about. And I say this not for myself. I say this, I think, for anyone. Let's take Elon Musk. Supposed to be the wealthiest person in the world. It's other people who will say that, not him. But I believe if you knew his full story, you have no clue how much debt he's in.
Well, that's true.
You have no clue how well or bad Twitter, X, or Tesla is doing. He's the one battling with those monsters. So the idea of financial success, I find it very visceral. It's the outward perception, or what people perceive of your outward projection. May not be true. So yeah, I'm sorry I'm not answering, not giving the answer to that. Yeah, but okay. I have been on earth long enough to know that financial success is it's a screensaver. Shake the mouse and see what's behind what's behind that. Yeah. So it's not anything I want to. I'm not saying there isn't anything like financial success. Financial success is very simple. You have more assets than liabilities.
Yes.
And you have a cash generating mechanic, or a personal economy that generates cash more than you consume.
Yes.
It's very simple.
It's that simple.
Yeah, so we can describe it that way.
Yeah.
But what we typically define as financial success, I know, and I've just given the case of Elon Musk, which is relatable to anyone, but people who you and I have personal relationships with and they appear successful.
You don't really know.
And they might truly be. They might have, by definition, more assets than liabilities, and they have personal economies that generate more cash than what they spend. That might be true, but you probably don't want what they're having to deal with.
Yeah. Yeah. That I think I can relate to that logic, and I sort of understand that logic. From Loop, what does success, and I mean, obviously for information that you can share, what does success look like? And if I'm not a Loop customer, why should I be a Loop customer? Why should I consider coming on board?
Yeah, so Loop, now we are existing as a proper two-sided platform. Previously, we only had Loop, the digital bank for consumers. Now there's Loop, a consumer app. Then there's also Loop, enterprise or merchant app and web or service. That's how to put it. And so I'll give the answer from those two perspectives. So for what a Loop user experiences is actually not just a financial services platform, but actually a lifestyle platform. You said you've seen the experience on Loop Discover. So Loop Discover is essentially a deals marketplace. It's not another e-commerce where you buy and sell goods. No, we don't do that. What we do is we aggregate deals for you. So if a particular merchant is, for example, iPhone X10 is out, now iPhone X -1, I still have stock, I want to push them out at 20-30% discount. We aggregate deals. So on Loop Discover, anything on Loop Discover is actually a deal. It's not the list price.
Right.
And then second, you have Buy Now, Pay Later or Loop Flex, which then enables you to pay for that item in installment. So Loop Discover is less about there's free coffee here, but it's more about this TV 40% off, pay over 3 months or 6 months. So what a Loop user will experience then is a lifestyle that is more empowering. You have access to better deals and you're able to save or pay for them on credit. The word empowering, remember, we can stake claim to being the primary promoter of financial inclusion in Kenya, actually in Africa. We are moving forward to actually now focus on financial empowerment. How do we empower you? Not just since inclusion has been solved now, what about empowerment? And for us, empowerment, we want our customers to describe it as I'm able to grow faster and with greater certainty because I'm with Loop or because I'm in the Loop. Yeah. So for individuals and actually even for enterprises. So on Loop Discover, we enable merchants to actually find buyers. We enable merchants to not just get credit, like I gave you the story of my barber, but also to find sellers. So there'll also be a business-to-business marketplace. I'm looking for eggs, someone who can deliver 10 trucks of eggs, and someone in Tanzania shows up on the platform and you're able to see. So businesses and organize them into trading groups of that kind. So in that sense, everything that we do, the ethos of what drives us, what's the job we want to do for you, is actually growth. That's if we are not relevant to your growth. We're not relevant to you because financial services must really be an enabler for growth.
Okay, I hear you. I guess if you get through this whole episode and you still don't think that Loop is beneficial or Loop should be a partner that you should have and the app you should download, I don't know what you're waiting for.
Thank you.
But thanks so much for coming to Financially Incorrect, Eric. We are just about our hour mark, and I think I've definitely learned. I've had a stimulating conversation with you about a wide spectrum on things on the space finance. Thank you for sharing the bits of the story that you have. Guys, please, as usual, for all of our episodes, we have in the description box the links to be able to download Loop and have it on your app. And you can be able to have this convenience at the top of your buttons on your phones. And we will see you guys next Friday, on the next episode of Financially Incorrect. See you then.
Thank you, Barack.
All right, cheers.
Thank you.